Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and this week we're gearing up for the final Federal Reserve meeting of 2024, arguably the most pivotal economic event of the year. Will Powell deliver another rate cut? Will the market rally continue or stumble? Let's dive into the data, context, and what it means for your portfolio. So the stock market has been on a rocky ride recently. Last week, the Nasdaq managed a small gain of 0.3%, while the S&P 500 slipped 0.6% and the Dow Jones fell nearly 2%. Its worst 7-day stretch since the early days of the pandemic in February of 2020. But here's the thing. Big tech has been the engine keeping the market afloat. The Nasdaq just closed above 20,000 for the first time ever. Tech giants like Alphabet, Tesla, Amazon, and Meta have been hitting record highs. But can this rally hold if the broader market continues to falter? But let's talk about what's on everyone's radar. The Federal Reserve on Wednesday. The Fed is expected to announce a 25 basis point rate cut, with the markets pricing in a 97% chance of that happening, according to the CME Fed Watch tool and its latest poll. Now, this isn't about just this rate cut. This is about the policies that are going to be put in place for rate cuts in 2025. As we can see here, we have that 96% confidence. And back in September, the Fed's dot plot projected 4 rate cuts for 2025, bringing rates into the 3.25% to 3.5% range by year end. But recent economic data, like a resilient labor market and sticky inflation, has markets now betting on just 2 cuts for next year. Analysts like JP Morgan's Michael Ferroli and Bank of America's Aditya Bobby believe Powell will emphasize a slower pace of cuts and possibly even hint at a pause in January. So pay close attention to the press conference at 2:30 p.m. Eastern on Wednesday. Powell's words could set the tone for 2025. Before the Fed takes stage, however, there's some critical data points. On Tuesday, the November retail sales will be coming out, where economists are expecting a uptick of 0.5%, I believe, and strong holiday spending is going to lead the charge. Now, hold on, let me pull this up for you all. Now, Bank of America reports that online holiday sales are running ahead of 2023 levels, suggesting consumer spending is still holding up despite higher rates. And then there's inflation. Last week's CPI and PPI reports showed some stubborn trends, but the Fed's preferred gauge, the PCE index, comes out on Friday. Economists expect core PCE to tick up slightly to 2.9% year over year, but remain steady at 0.2% month over month. Translation: inflation is cooling, but not as quickly as the Fed would like. This makes Wednesday's Fed meeting even more crucial in shaping the narrative for 2025. And here's a stat you might have missed. For 10 straight trading days, more stocks in the S&P 500 have declined than risen. That's right. That's the longest streak of 2001. Despite this, the S&P 500, as we can see here, is still 3%. Let me go ahead and pull up our chart. Is still up 0.3% for December, thanks to the Magnificent 7 tech stocks. But analysts like Steve Sosnick from Interactive Brokers are raising red flags. Weak market breadth could signal underlying cracks in the rally. If big tech stumbles, the broader market could face serious headwinds. It's not just about the Fed. We've got some big earnings on deck this week. Nike, FedEx, and Micron will report their quarterly results, but providing a glimpse into consumer spending, supply chain dynamics, and the chip industry's outlook for 2025. And don't forget Carnival Corporation, which will shed light on the travel and leisure sector's recovery. Will results confirm a strong consumer or hint at a slowdown? Stay tuned as we release those reports as well. So why does this all matter to you exactly? Well, the Fed's decision directly impacts everything from your mortgage rate to the value of your investments. The market is at a crossroads, and the Fed's next move could determine whether we see a continued rally or a pullback into 2025. Remember, the Fed isn't just watching inflation, it's also eyeing the labor market, consumer strength, and geopolitical risks. This week's data and Powell's commentary will give us a clear picture of what to expect next year. All right, and that's your deep dive into the final Fed meeting of 2024 and what it means for the markets. Don't forget to mark your calendars for Wednesday's press conference and Friday's PCE report. We'll be here to break it all down for you. Make sure to like, subscribe, and hit that bell notification so you don't miss follow-up analysis, and drop a comment. Do you think the Fed will deliver more rate cuts in 2025, or will inflation keep them cautious? Let's discuss. Until next time, keep making those trades and gains, and I will see you in the next one.